It's a special late night edition of Money Talks. We've got Robotaxis, Robobuses, robots, Tesla galore coming to you live from my studio, actually. But we were watching live via, I think it was Universal Studios. Anyway, we've got Tesla, we've got conflicting economic data, we've got sideways fall, used to be sideways summer. All this, the latest crypto news coming up. Gang, it's time for Money Talks. Let's do this. Okay, gang, welcome to another unbelievably exciting episode of Money Talks. I am your host, Bill Barheit, the founder and CEO of Abra. You know that. Let's get to it. Okay, it's late night Thursday. We wanted to wait to bring you this episode after Tesla announced their robo-taxis, and they didn't disappoint. He was a little disjointed in his presentation style, felt a little maybe unprepared in terms of the talk, really focused on the product, which you have to respect. The car, the robo-taxi was super simple, right to the point. Look, if you're going to make a taxi for, I think he said $20,000, which is remarkable. We'll put it up on the screen, but the first videos, he actually rolled into the stage in a robo-taxi, which was very impressive. As I said, his speech was a little disjointed, which you can forgive him for. I suppose he's a product guy, but you would have hoped he would have rehearsed a little bit more, given the importance of tonight. But the taxi, the robots, he had an army of Optimus robots following him up on stage, and then of course the big one more thing surprise was the Robo Bus. Now we'd heard rumors of this, but this was definitely a surprise to be shown tonight. And it's not getting released anytime soon. It seems to be a prototype. So in terms of the announcements, we will see full self-driving, autonomous, no driver assist, according to Musk, before the end of next year, so 2025. That would be 9 years after I bought my Tesla with full self-driving. So I suppose you can all thank me for financing the development of full self-driving. Then we had the availability of the robo-taxis, which he's saying is sometime before the end of 2026. So again, 2 years out. And then the robo-bus, no release date given as I can recall. And then of course on the Optimus, he's saying $30,000. He thinks it will be the biggest product ever, not Tesla's biggest product, but the biggest product ever, implying that by the time it's generally available, all 8 billion people on the planet will want one. Now, obviously at $30,000, not all 8 billion people will be able to afford one, but I'm guessing the leasing and finance options are going to put Tesla right in the middle of the banking business, like I believe most car companies are with their financing arms. But selling 1 billion of something is very different than selling a couple of million of something. So who knows? But exciting times ahead for Tesla. Now, look, I think I'm not a stock picker per se. I wouldn't be surprised to see the stock pull back on the news. This will have played out by the time you're seeing this on Friday or Saturday. But just given the timelines, I don't really see any of today's announcements having any meaningful short or midterm impact on Tesla's revenue. Now, if you're a long-term shareholder and if you own stocks in general, it's good if your time horizon is forever. Speculating on stocks is just like speculating in crypto. It's a sucker's game because retail is always basically getting taken out by the big boys. But if your time horizon is forever, especially with tech stocks and crypto, you can usually do or often do quite well. Well, this isn't investment advice, and I'm not holding equity right now. I'm all in on Bitcoin. But I do think that if there is a recession, I could see myself actually buying some Tesla calls at the tail end of a recession because I think Tesla will get an outsized run up in the next big market moves post any potentially pending recession. Okay, I'm sure you'll all have seen the videos by the time Money Talks comes out, but still super exciting day. I had a bunch of friends who were pinging me and texting me to live from, I can't remember which movie studios it was, maybe Warner Studios in LA, but it looked like they basically had their own effectively movie set for the launch of these products, which is incredible. Okay, so well done to Elon and crew on that. So let's talk about the election. So big change this week. I'm looking at Polymarket, the 1 week chart for the spread on the odds between Trump and Harris has widened significantly. They were effectively tied this time last week at about 49.3% each in terms of odds. And the spread has widened to almost 12%. Trump now has a 55.5% lead to Harris's 43.9% lead in just a matter of days and hours. That is truly remarkable. I mean, most of that change has come basically in the last 3 days. So clearly Trump is pulling ahead in some of the battleground states. I think his rally with Musk a few days ago had a big difference, and he basically did this rally in the I forget the name of the town in Pennsylvania where he was shot, but basically did it at the same spot where the assassination attempt happened. Absolutely remarkable to see the turnaround there. So yeah, not much more to say there. We're only 4 weeks away from the election, and thank God we just all want it done. And those of us in crypto, you know how I feel about it, and I'll try to leave the politics aside. But you know why? Many of you feel the same way. We've kind of been pushed into our political positions this time around, and I hope it works out for us all. Okay, so enough of that. We'll have more to say if there's any interim news, but for now, it's pretty clear that Trump is pulling ahead in the battleground states, and we'll see what happens over the next few weeks. On the macro front, let's see what's happening. So, you know, I was looking at the bond markets on yesterday and earlier this morning, and it clearly is a tale of two cities right now. First of all, as you know, the Federal Reserve lowered interest rates by 50 basis points a few weeks ago. Now, normally what would happen when that happens is you would see a shortening of the Treasury yield curves, right? So Treasury yields would come down. However, Treasury yields have been spiking, and they've been spiking significantly in the short-term Treasury markets over the last few days and weeks. Particularly the last week or so. And the reason for this appears to be that the demand for our debt is greatly diminished, which is causing the shorter end of the yield curve to spike, right? 10-year treasuries and whatnot have been over 4% and on the move. The DXY is back up to about 103, which is extremely high in a falling interest rate environment, and tells us that the demand for dollars is actually pretty high, which is very interesting, and that could be a function of the fact that the cost and the interest rates being paid on short-term treasuries is going to be much higher than the Fed was hoping for at the time that they lowered rates. So this creates a real quandary for the Fed, because the Fed can't control what Treasury does. In other words, if the Fed had its way, the U.S. would get its economic act together and stop borrowing so much damn money all the time. But that's not up to the Fed, it's up to Treasury, right? So, or Congress, as it were. And Congress is clearly not going to stop borrowing money. At the same time, the demand for existing debt is falling, which is why the rates are going up, and yet they're going to be printing more money or borrowing more money to cover the deficit spending that we're going to be continuing to run for years to come. So this is basically creating a negative feedback loop, and I believe, and I've said this over time, there is a chance we see bonds spike in the next 12 to 18 months, and then see just a precipitous crash in the U.S. bond market, where the only way to finance our debt is for yields to just skyrocket. And I'm not looking forward to that. It could be ugly, but look, I heard somebody say today on an interview I was listening to, there's always a price, right? Even in a crashing market, there's always going to be an interest rate at which someone will buy our debt. If it's not 6%, it could end up being 16%, right? Now, that would be a disaster for the economy, but at the way things are going, I don't see that not happening in the next few years. I can't say if it's going to be, 12 months or 36 or even 60 months out. But I think it's going to happen, and I think it's going to be ugly. And when it does happen, it's going to happen very quickly, in my opinion. Okay, so in the short term, though, let's talk about what we're seeing on the yield curve and labor market fronts. Traditionally, when we see the yield curve steepening like we do now, usually that implies that the labor market is going to be contracting. Now, we had an actual surprise to the upside on jobless claims this week, right? So the new claims have actually remained somewhat surprisingly low despite the yield curve steepening. And again, it's just a correlation. Historically, when the yield curve steepens, it implies recession coming, which usually implies jobless claims will be increasing. Now, typically, if, as I said, the curve steepens before a recession, jobless claims should start to rise. Now, since that's not happening, typically what would happen when we have this scenario, two things might happen. In the first scenario, let's call it scenario A, jobless claims can stay low and the yield curve reinverts. The yield curve is basically the difference between the 10-year Treasury and the 1-year U.S. Treasury, right? And that the plotted difference gives you the yield curve. Now, the first scenario, as I said, is that the yield curve could reinvert and a recession could be delayed. And this has happened in the past 20 years a couple of times. It happened or 25 years. It happened in 1999 and it happened in 2006 when the yield curve steepened. The jobless claims stayed low at the time, and both times the recession happened, but it was significantly delayed. Now, the second scenario, or scenario B, is where jobless claims can rise in the next few months and actually catch up to the yield curve. This is what happened in 2007 when we had the so-called Great Recession. In 2007, the job market was strong as the yield curve steepened, but eventually the jobless claims did rise significantly, as we all probably remember, confirming the yield curve signal and leading to a very significant recession, which we all, those of us certainly over the age of 30, remember quite well. Now, it's possible that we have scenario A, right, where the yield curve reinverts, the recession is delayed. It just doesn't feel that way to me this time. The government has been spending so much money propping up the BS job numbers with government jobs, and I just don't see how they can continue with that nonsensical BS model for propping up the economy. In other words, I do believe jobless claims over the next year are going to rise dramatically, right, which is going to push us into some form of recession, or close to it anyway. In the meantime, right, because we're not in the government's definition of recession yet, the markets will usually reward that by continuing to rise historically, right? Even when the Great Depression started end of 1929, the market was skyrocketing, right? It had a kind of a blow-off top in September of 1929. Obviously, it wasn't there, but you can go look at the charts. They're crystal clear. And then the market basically just crashed, fell right off a cliff over the following basically 3 years. I mean, it just crashed basically went straight down. It was so high, it took 3 years to get to the bottom. And then it took, over a decade, well over a decade after that to recover. So I don't think we're going to see a depression this time around, but we certainly could see a reasonable rise, a blow-off top for the cycle, and then a steep fall for a recession. But usually after those kind of recessions, the market recovers quite well and within months. Now, it's not investment advice. I don't have a crystal ball, but this is what I'm seeing now. We're not in recession yet. We're heading towards a fork in the road. Yield curve reinverts. Recession is pushed out for a while. Job market continues to run, not hot, not cold, but somewhere lukewarm in the middle. All good. Jobless claims, go through the roof. employment numbers fall precipitously, we're probably headed towards recession. That's the fork in the road. We'll see by the end of the year where we land. Either way, my prediction is that risk-on assets will have a very good winter. And again, not a crystal ball, but it would be very shocking to me if coming out of an election, especially with the Republican candidate ahead, that we don't have a great end of the year and new year for risk-on assets, especially crypto and tech stocks. We'll see. Peter Todd. Who is Peter Todd? So this week, HBO released a documentary on Bitcoin, and I'm very loosely saying on Bitcoin. It was called HBO's Money Electric: The Bitcoin Mystery Documentary, which confronted Peter Todd and Adam Back as the potential candidates for Satoshi Nakamoto. Now, I know both, and I can tell you that, first of all, this was not a documentary on Bitcoin. This was really a documentary on Blockstream. And I don't know if Blockstream was a paid producer of this documentary. Kudos to them, because it was more or less a free commercial for Adam and Blockstream. I'm sure anybody who's interested in crypto now is going to and watch this documentary is going to be well aware of Blockstream. I have no problem with that. It's just I prefer that they would have called it something else other than a Money Electric: The Bitcoin Mystery, if it was going to be more or less a shill of Blockstream and Blockstream services and why we need small blocks for Bitcoin and then need to buy services from Blockstream to make Bitcoin more useful when we have small blocks. Again, it's fine with me, no problem with it. Call it what it is, so be it. They totally got it wrong in terms of who Satoshi is. Adam is not Satoshi, and Peter is not Satoshi. Adam did not have the technical ability to create Bitcoin. He's clearly explained why. He also clearly explained why he didn't totally understand why Bitcoin was decentralized in the early days, and he's been very upfront about that. Obviously, he gets it now. And Peter was basically a preteen or early teen when Bitcoin was being created, and certainly didn't have the mathematical, cryptographic, or historical understanding. I did a tweet, a very long tweet. You can go read it if you're interested in the technical understanding as to who I think Satoshi is. Not the name of Satoshi, but in terms of a description of the kind of person, in terms of age, technical understanding, background, who I think Satoshi is. You can go read the tweet online, and you'll have an understanding that clearly HBO, the folks who did the documentary, not only didn't have a clue as to who Satoshi is, they got it completely wrong, and they have no chance of figuring out who Satoshi is. Just given that they're on completely the wrong track. Anyway, it was an interesting documentary. It is worth watching if you're into crypto. Just go in with eyes wide open. That it's not a viable story as to who Satoshi is. It's just kind of an interesting story about one perspective on the history of Bitcoin and how Blockstream and certain actors involved in Bitcoin came into prominence. Okay, so that's that. Interesting FBI news this week. So the FBI created a crypto token. This is crazy. Okay, so basically, in order to entrap some folks, the FBI created a crypto token to expose a fraud, and they seized $25 million in cryptocurrency and arrested or charged 18 people with myriad crimes related to fraud and manipulation in the crypto markets. Crazy stuff. So not only was $25 million worth of crypto seized and multiple trading bots that I think were responsible for millions of dollars in wash trades for like dozens of different cryptocurrencies, right? Basically the FBI created a fake cryptocurrency company and a fake token. I guess it's not a fake token. They actually did create a real token to expose the fraud in the crypto market that these individuals were allegedly undertaking. The token appeared totally legitimate. It allowed investigators to track all these illegal activities like wash trading and market manipulators. And supposedly a few market makers, along with their employees, were charged with the wash trading. Anyway, crazy that the FBI even had the insight to do that. And I guess the SEC filed civil complaints alleging some type of securities law violations relative to the conduct of those companies as well. Excuse me, as well. But absolutely crazy story. Go check it out online if you want to hear more details. Never heard of a regulator creating a fake crypto before. But super interesting. Van Eck, global asset manager, Van Eck, huge asset manager, has launched a crypto-focused venture arm. I find that super interesting. They're raising or have raised, I think, 30 million for their first fund. They are a global investment managing giant, really overseeing, I think, over 100 billion in assets. Obviously, not in the same league yet as BlackRock, but still huge with over 100 billion. And their first venture fund, as I mentioned, will be over 25 million. I think they're targeting 30. Yeah, 30 million is the number I'm seeing for the first raise. Very impressive numbers here. Super excited to see what they come up with. Obviously, any VC that's focused on crypto is going to be super interesting to me. And just getting another TradFi player focused on crypto is probably better than a lot of other things they could be doing with their time. And so that's the news. So much going on right now. I wanted to take a few minutes and just give you my take on this whole kind of sideways summer, which is now turned into sideways fall, right? So one of the things that we're seeing from a technical analysis perspective is that the funding rates for the perpetual futures have been rising, which usually indicates that the market could be a little bit vulnerable to an unexpected downside move. We did get that move on Wednesday of this week, and the markets have since recovered. But the rise in the perp funding rates, like I said, it often indicates markets are vulnerable to expected downside moves. Traders leverage positions in a speculative bullish trend. And in other words, right, if traders are over leveraged, a small move to the downside could trigger a cascading set of unwinds, which could cause a precipitous fall as that leverage then completely unwinds. We'll see. I think the worst of it was behind us for this week. We had a move, I think, down to 58K or 59 and change, or 58 and change, excuse me. And we're now back above 60K as of the recording of Money Talks today. So and we're sitting at 60,500 per Bitcoin, 141 for Solana, and Ethereum remains in the doldrums at 2,400. It's going to be really interesting. I mean, Ethereum has had quite the year. I mean, effectively, Ethereum is flat for the year, right? I mean, I think Ethereum was let me see, January 1, it was at 20. Yeah, basically Ethereum is flat for the year or even down a little bit, which is truly remarkable. I mean, if you look at Bitcoin, Solana, they are up big this year, and Ethereum is basically ending the year after 10 months and change, or 9 months and change, right where it started, and certainly has a sell print on it, whereas Bitcoin and Solana are kind of neutral prints right now from a technical perspective, given that they've been sideways for so many months after some pretty big run-ups. I mean, you got to remember, Solana is up, so if I go from the last 12 months, right, so let's say early October last year, Solana was trading for about $20, and it's about 140 now. So Solana's had a 7x run in the last 12 months, and if you and it was a 10x run when it peaked back in April, and Bitcoin last October was at about 27,000, and it's at 60,000 now. So that's a little over a 2x run for Bitcoin, and its peak in April, it was closer to a 2.5x run, right? Because it had peaked at I think somewhere around 73,500. I think that was actually back in March, but yeah. So So interesting that both Solana and Bitcoin have far outpaced Ethereum this cycle. I've talked about my feelings on that many, many times. Still very bullish on Solana. Solana does have some interesting competition coming. The Sui network, Sui, I don't know how you say it. I think Sui has had some remarkable numbers and a big, huge run from September 1st until today. It's up almost 3x, right? So that's what, 5 weeks? Jesus. Quite the run for Sui. As a matter of fact, it was up over 3x until earlier this week and then pulled back. The candle, it's actually it's a reversal candle right now if it confirms, right? It's certainly a topping reversal candle. It looks like a spinning top, as we call it in technical analysis. So Sui, while it looks super bullish, it certainly would have to reconfirm the prior highs from March of this year at about $2.20. If it crosses $2.20 on the weekly chart, I'd probably start buying Sui. And that could happen anytime given the current numbers, but that's just my reading of the technical tea leaves. I'm bullish on it long term either way. I'm also bullish on Aptos right now. I was happy enough to get some time with the Aptos team. I think Aptos is basically flat on the year, right? So pretty much in the same price it started the year at, maybe up a little bit on the year, but more or less flat for the year. That's after a huge run up from $8 to $20 in late March, and it's all the way back down to $8 again. So I'm bullish long term on Aptos. We're seeing some very impressive scalability numbers there and some strong developer interest. Sui, Aptos, Solana, clearly getting the majority of the L1 developer interest these days. Certainly in terms of growth, we're not going to count Ethereum out. I think Ethereum is doing some really interesting things, and we've got some news out of Vitalik this week where he did mention that they're going to be doing some improvements which should improve Ethereum's throughput by about 50%. I hope they basically eliminate this L2 market. I get it. I understand why it exists. I'm okay with it, but long term, I think that the scalability models for the next generation L1s are going to eat Ethereum's lunch unless it figures this L2 problem out. I know that the majority of ETH maxis strongly disagree with me on this, but there's no denying that the developer interest is proving me right. Okay, so again, sideways summer has turned into sideways fall. If we look at the Solana chart, right, it's basically we're at the same price we were at in March. So that's April, May, June, July, August, September, October. We're now in month 7 of sideways movement here with more or less falling volume. That's what you want to see in a consolidation phase. Now, if I look at the price of Solana per Bitcoin, this is remarkable. Now, this is the weekly chart. You can see the wedge in the green lines that I've painted on the screen here. I'm going to zoom in so that you can see it. This is the price of Sol per Bitcoin going all the way back to 2021. You can see it spiked back in 2021 at about $4.50. I'm sorry, 0.0045 Sol per Bitcoin. And that was, about 3 years ago. I think that if you see this rising wedge, right, so if you go back to last summer, since then, the price of Sol per Bitcoin is up about 4x or 5x, which is remarkable. Makes sense since Sol is up 7x versus Bitcoin only up 2x. And this wedge looks like it wants to play itself out by the end of the year, right? It at least my reading of the tea leaves has it resolving itself by mid-December or sooner, right? Can certainly resolve itself tomorrow by falling or rising above. I wouldn't be surprised if we see a fake move to the downside before the election, below the wedge, below the pennant, and then scream higher. If we close on a weekly candle above this, this pennant, I think Solana is going to Valhalla. I really do. Now, I have no crystal ball that says if or when that might happen, but I would not be surprised if when we see 100K Bitcoin, we could easily see $400 or $500 Solana. which would probably put us back up in this all-time high for the Solana Bitcoin price here. So this is a dramatic pennant, folks. If you do any kind of technical chart analysis, this is not an hourly or daily chart. This is a weekly chart. Look at this consolidating pennant, which has been happening since December of last year. It's truly remarkable. It's one of the most beautiful pennants I've seen for for an exponentially growing asset like Solana. So it kind of reminds me of Ethereum in the 2021 run-up, and hopefully you remember what happens there. I mean, Ethereum just mooned after that. So hopefully good things on the horizon here as we come out of the doldrums of what went from sideways summer to sideways fall. All right, so we're going on 30 minutes. We're going to call it there. We already did some tech news with Tesla, and like I said, super bullish in the mid to long term on Tesla. They may suffer a little bit in terms of orders and deliveries, especially if we go into recession. But if the stock price falls significantly, I'm actually going to look to buy some Tesla calls myself. And I don't really buy too much stock or do too much stock investing these days since I'm all in on crypto. But I am pretty bullish on Tesla, and I'll definitely take advantage of some downside moves with some call options. Let's see. So we're in preseason for the NBA. Don't have much to say yet. My Warriors are minus Klay Thompson this year, and we'll see. But they've got a couple of good pickups. They had 28 three-pointers versus Sacramento yesterday. Their season high as a franchise, I believe, is like 27. They scored 28 in a preseason game. 28 three-pointers in one game. That is remarkable, if I have my numbers right. And so that's without Klay Thompson, folks. So I know most of you don't follow basketball, don't follow the Warriors, but I'm a huge fan. And the two sports I follow pretty religiously are NBA and Formula One. And so I don't know how many of you are fans of either. Let me know in the YouTube or Twitter X comments and what your favorite sports are. I'm curious. And if everybody says shut up, stop talking about Formula One and NBA, I'll shut up and stop talking about Formula 8. Maybe I'll talk about it whether you like it or not. I don't know. It's my show. You can always start your own show. Anyway, let's stop there. Okay, so have a great weekend. Hopefully, sideways fall is almost over. And like I said, congrats to Tesla. And we will see you next week on Money Talks. Take care, everyone.